Crypto markets are pumping despite some pretty negative news and a hot CPI print. That's right, 2023 is not conforming at all to the rules of 2022. This transitory Goldilocks period is turning out to be not so transitory. And in fact, some of the worst news that the crypto industry has seen in quite a while, as well as a full-on ramp up on the war against crypto, has not seemed to cause any kind of price fluctuation to the downside, more than a momentary liquidity grab. We're going to explain what this new market is like and exactly how I'm playing it. But most importantly, this Valentine's Day, shout out to all my lovers in the building and all my people who are single out there. Shout out to both of you. It turns out you're more attractive by being a crypto fanatic. So if you're here, the internet thinks you're hot as hell, and that's pretty cool. But let's get right to it. The markets are really bullish. Let's decode this situation and figure out how to play our stacks right now so we can understand the trends, anticipate, and again, make money in the long term. Now, the meme don't lie. We have all the bears getting brought out by the Totoya tractor here, Totoya tractor, that's really important, being driven by the bulls here. Now, at the time he tweeted this, ETH was up, SPX was up. Now, SPX is about sideways right now, a little bit down. Dixie's up and yields are up. Essentially, he's saying you can exchange your crypto coins for more stocks, which earn more dollars, which earn more interest, and still outpacing the purchasing power with every other country in the world. Gotta love it. But as Rookie points out here, the dollar's breaking up through significant resistances, SPX sideways and down, Bitcoin going up with funding negative on Bybit and Binance, and he says TF is this new paradigm. Let's talk about this new paradigm. This is a little bit like when you're in middle school and you get pantsed in front of everybody and people are throwing their puddings at you, they're throwing their jellos at you. You feel like you're the laughing stock of the entire school, and the next day, the hottest girl in the entire school comes up, gives you her number, and asks you out to be her Valentine's, and everywhere you look, your stock is just pumping. That doesn't make much sense. In fact, that's not how many people lived and experienced their middle school years, save for those 12-year-olds who launched some NFT collections in 2021. Y'all are mega chads. But let's be real, this recent crypto price action doesn't seem to make a lot of sense. To the point, Binance got absolutely manhandled by regulators and prices up 6%. This is a different market than it was a couple of months ago. It's pretty clear for anyone to see that isn't holding their ears shut while throwing a tantrum. Suffice it to say, things are confusing, especially because we got this hot CPI print, which makes you think, hey, the regulators are going to ramp up. They're absolutely damning rate hikes and suffocating of the market. That's the narrative that I've been huffing down all of 2022. But like I said, I got the urge to buy little bits, again, small amounts of my portfolio at the end of December, beginning of January, and it's been a nice wave. And I've been telling you the whole time, I haven't been overcommitted because the situation is so confusing and rapidly evolving. But we've just gotten some really interesting data that I think you need to understand, and it pertains completely to the macro narrative, and it's got some of the most brilliant macro analysts completely losing their minds over it. So check this out. This is from Liz Young here, and she's saying interesting tidbit. If you look at the smooth CPI month over month prints, over 80% of inflation is coming from shelter. As you can see, it's the yellow bar. If you look at that bottom right candle here, you can see that the yellow bar is pretty much all of inflation, right? It's all of inflation, right? It's not all of it. Obviously, there's a little bit in core services and ex shelter and then core goods, but most of this, it looks like about 75% is shelter. Now, what we also know is that shelter inflation is dropping very aggressively. Housing prices have been coming down, of course, because the higher interest rates make it way harder to buy homes. Effectively, you're paying double the amount of monthly mortgage rates that you were when compared to a little bit over a year ago. And this is a lagging indicator, which takes a while to actually show up on the inflation charts. So if you understand that shelter prices are going down, and really shelter is kind of that last big chunk of inflation, I mean, what happens if this yellow bar just absolutely goes down like a stone? Getting that 2% mark might not even be that insane. But remember when we told you that they changed the way that inflation was weighted, and I wouldn't be surprised if it led to them being able to declare a premature victory over inflation. Well, is that what's going on here? Are we just rigging the game so that we can win? And if we're rigging the game so that we can win, meanwhile, the dollar is actually going up in value versus other currencies in the world, that means purchasing power is actually increasing versus other currencies in the world. I mean, in a world where the debt ceiling isn't really a debt ceiling and it keeps getting raised and raised and raised, what is really the actual driver of value, and how can this economy sober up from what seems to be this nonstop addiction to stimulus, easy money, and changing of the rules of how we measure the game? Well, the answer is I don't have all those answers for you, but I can tell you, short term, the data that is actually dictating decisions by the Fed is currently looking like it's going in the right direction. And meanwhile, the markets are responding and pumping the heck out of coins and stocks. Meanwhile, January retail sales were up 3% versus 1.8% expected, and this is at the very high end of 60 individual forecasts. Consumers strong, really consumers drive the whole economy. Inflation's going down, stocks are pumping, crypto's pumping despite insane, almost unthinkably strong regulatory news. And after the Blur airdrop yesterday, the entire market for the NFT space has been awash with green numbers on floor prices with a ton of new liquidity. There's a lot to pull apart here, but remember when I told you on the last video that the markets are really about 4D chess? You see these bad news articles come out, you see the markets dump, and the combination of those two things gets you really panicked. But I told you my spider sense kind of went off and said, it doesn't really feel right to me. This dump isn't very significant. And quite frankly, if we're staying well above that 20,500 mark, it doesn't feel like the charts are really that bearish. Now, of course, if we break below 20K, all of this goes away. Forget everything I said. If we start closing candles on Bitcoin below 20K in a significant way, day over day, week over week, things are going to start to look much more bearish. And we can start talking once again about those renewed lows. But right now, the bull momentum is not stopping. And I actually have a pretty interesting video coming up for you outlining some of the reasons why I think the economy could continue to do well for the next few weeks or months. Now, it's worth pointing out the almost eerie similarities to this bottoming in December of 2018. And then we have this price rise throughout 2019 with a topping pattern here coming in June of 2019. And this from the ultimate low of, 3,000 or so, 3,200 up to the ultimate high. I think it peaked in the 13 or 14, I think it like touched 14,000. But anyway, that's pretty much like a 4X here. Let's call it a 4X, right? From the time that it regained this critical level of 6K, which we could say, happened here, it did about a 2X, right? So maybe, just maybe, we'll see that out of Bitcoin going to 40. I mean, that would be very, very generous if it went to 40. But then it also came way down after this run, it came way, way down. And maybe it paused about where it started, right? So you see it come down and almost revisit that 7K, 6K level. Extending the chart here, you can see that it was about the 6K level that was holding the support, and it goes all the way up to, 13, 14, comes all the way down over the several months following, and touches about 7,000. Now, we had the COVID crash here, but let's just ignore that. This kind of goes all the way up, then comes all the way back down. What I'm trying to say is that the 4-year cycle stuff is actually eerie in that the evidence for these 4-year cycles keeps mounting, even though the narratives don't make any sense and they shouldn't continue. 2020 was a lot like 2016, not in the narratives, but in the way that the market grew. 2021 was very much like 2017, actually more like 2013, but it still correlated to that final year of the 4-year cycle. Then we had the 2020/2018/2014 flush out. They all just went the exact same way. So if we continue to grow like this, it's just something interesting to focus on. But I want to point out something here. I've enjoyed these pumps. I haven't minded the dumps. I've been pretty much cool, calm, and collected this whole run. And the reason why I've been able to do that is this one trick, which I'll be going over in the next video. I'm just going to tell you it now because I'm not going to make you wait. It's all about position sizing, right? If you keep your position sizes small enough and you spread out your bets over a period of time, if the market goes lower, great, I have capital to buy more. If the market goes higher, great, there's more liquidity, more stuff happening, more excitement in this space. And to be honest, it gets way easier to deploy capital and make money. The only way to really lose is by getting over emotional, over committed, and sort of praying for the market to need to do what you want. But ever since 2022 took hold, I've been hammering home 2030 as the year that I'm really looking at for most of my investment decisions this year and over the next year or so to mature. And if you think about it that way, it's really hard to get frustrated because in a globalized world where the US regulators clamping down on crypto is not completely destroying the markets, it's quite clear that crypto might shift shape, but I don't see a world in which it dies. Bitcoin is actually designed to resist this government attack. So what am I doing? Once again, I'm keeping it cool, calm, and collected. I'm not FOMOing pumps. I'm not fudding dumps. I'm just observing the market and trying to plan long-term and taking little bites out of the market, out of things that I enjoy, stacking my ETH and Bitcoin over time, and enjoying these wild and historical market conditions. As stressful as they can be, they're less stressful when you're not completely overcommitted. Anyways, I'll be here all week, all month, all year, and I'll see you very soon on the next one.